Hey everyone. I got a text message early this morning from my youngest son, Luke, that said, "This is going to get spicy." And I think he was right. We know some of the issues that have caused the market sell off. Heightened U.S. recession concerns, ignited by underwhelming July employment data, following an upside surprise on GDP growth just about 2 weeks ago. There were higher than expected weekly unemployment claims and weak readings on construction, durable good orders, home sales, and manufacturing activity. This was then added to with last Friday's softer than expected employment report, both in terms of payroll job gains and the unemployment rate, which rose to 4.3%. Conflict in the Middle East continues to be a concern, not only with the persistent Russia Ukraine battle, but new risks between Israel and Iran. Warren Buffett has been a seller of stocks of late. In particular, he's offloaded about 50% of his Apple position. Japan's Nikkei Dow has fallen approximately 17% over the last 5 trading sessions. On the positive side of things, many aspects of the economy remain on solid footing. The consumer spending growth rate remains positive, and wage growth, a key driver of consumer spending, has grown steadily for nearly a year and a half. Business spending is also robust as corporations leverage fortified balance sheets and invest in technological enhancements. Last, with the majority of the S&P 500 companies having reported at this point, earnings were better than expected with roughly 10% year-over-year gain. For fixed income assets, rates fell and spreads widened. The U.S. Treasury 10-year yield reached an intra-year high of around 4.7% in late April and now sits at around 3.76 at this time, about a 20% peak to trough decline. Fortunately, a reset in rates has allowed high-quality fixed income to once again serve as a portfolio hedge, with most high-quality bonds acting as ballast in recent days. We will wait to see what the Fed does, but Fed funds futures markets are pricing in a cut in September with just about near certainty. Behavioral bias of loss aversion is a dinosaur version of our brain screaming, "Do something," in times of market turmoil. As you've heard me say before many times, we did it already. Proper asset allocation, goal setting, and long-term planning will win the day. As I always say, just breathe. As always, we're here if you need us. If you'd like to talk about any of this in more depth, please give us a call. We'd love to chat.